Good afternoon, everyone. Welcome to Hit the Bid here on January 18th. This is Ty Robbie here through Week 3 Market Watch. Today we're going to run through our charts and see what happened in the markets over the last week and see what we have to look forward to as we head into Week 3. So let's jump right in and get started. First on the board today is our February live cattle. This will be the last day covering this February contract, as we did see rollover start to take place last week. Volume is starting to move out of this February contract and over into April, so this will be the new front month contract going forward. We'll be focusing on April 26th, but for review purposes here today, we will keep February on the board for one last day. Last week, we did see the bulls step out on the right foot with Monday and Tuesday's action briefly pushing higher, getting some traction early off of a Monday's opening range, driving right up there on Tuesday to that prior week's high, where we did see resistance start to step in at 237.5 here for this February contract. From there, we weren't able to see those bulls push up to new weekly highs. However, this February contract has been where the relative weakness has been, as we have seen more strength out here in these back months, starting with April. We did see April making new weekly highs there on Tuesday, and we also did see some more strength here the further we go out into 2026 with these summer and fall months continuing to push up to new weekly highs there into Thursday and Friday's action as well, before we did see Friday's big breakdown. Wednesday and Thursday's action here for February tried to find some more support at our bull pivot right around 235.5, but then Friday's sell-off just was too much, and we did see this market sell off right down here below our bear pivot at 233, getting that selling pressure to really kick in and sell off down here to 230, briefly undercutting that 50-day moving average, but we did see late day action where the bulls stepped in and offered some support at that 50-day average, and in this multi-week range we spent trading in here throughout the month of December. Good support stepping in where it should be for this February contract, but as we are starting to see volume move out of this and over into April, it's a good sign here to see the relative strength and more support here on this April contract. We did see Friday's low coming in here just above that 50-day moving average and also finding support right around 231.25, which was the top end of that range we spent trading in throughout that same period in December. Good buyer support here late around our major moving averages, exactly what we want to see in the face of a big sell-off like this. We want to continue to see this market balance out and offer support here before we commit to new long positions. But we do expect to see some buyer support here anywhere between 231 and 234. If the bears are able to keep on pushing, keep Friday's sell-off pressure moving into Monday's session, breakdowns below 231.25 could flush all the way down here towards 227, as we did have this multi-week range here throughout the month of December. This market should offer a good demand zone all the way down here to 227 to 231. Pretty wide range area, so not something you want to step in front of right away. We would like to see this market balance out early this week, put in some tight range days, offer some good buy points before we commit to any new long positions. But this market still remains in a nice uptrend, and we still expect to see the bulls come in and offer good support to this market. We should see this thing try and find some support here at our major moving averages or down into this demand zone right around 230. Either way about it, though, we want to see the bulls offer some good buyer support early this week, and we should see a good launch point to keep this uptrend rolling here into the late part of this month. Look for this April contract to continue balancing out here in the low 230s. We'll monitor this situation throughout the week. We want to see a good balance action here, and should be setting us up for good buying opportunities for the bulls to take this market higher once again. This market has just been pretty extended here after making a nice rally all the way from about 205 all the way up nearing 240 last week. This market has had a pretty impressive run over the last month and a half here, almost in a straight line as we've pushed back up into uptrend territory. So this market just needed a little bit of pressure, needed to take a little bit of a breather here after this impressive run we've had. But we should see the bulls continue to offer support to this market and keep this uptrend rolling. Look for this April contract to move into the front month spot, and buyers should take this market higher at some point during the week ahead. Next up, our March feeders on the board. The feeder market has been where the relative strength has been for a whole for this cattle market since these Thanksgiving week lows. We've seen just a nice steady grind higher over the last about month and a half to 2 months here in this feeder market, pushing off of these lows down here right around 293 all the way up to 365 last week at the high. We did see good action early last week with Monday and Tuesday's action, pushing above 355, rallying all week long, right up into Thursday's high, closing up there near the highs. Friday's big sell-off did push this market lower, briefly hitting the limit down move at one point, but this market just had been so extended that even a limit down move didn't even get us back down below those prior week lows. We do have some overhead supply here that could push this market lower. Look for early offers below 355 to take this market back to our major moving averages and try and find some more support. However, if we do continue just to balance out here at around 355 to 354, that'd be a good spot. Look for this 20-day moving average to come up into this area. This market has been where the relative strength has been recently, so wouldn't be surprised to see some quick support here right around these prior week lows and that 20-day moving average before turning higher once again. The big picture uptrend still remains intact, so this market should start to find support early this week and turn higher and start to head back up here towards this overhead gap that starts right around 371. That's going to be the upside target from the bulls after they find support this week. But just be cautious. Anything below 355 here, we could see that pullback continue to get underway. We do have support all the way down here to this 50-day moving average at 341. Got some wide ranges, so don't be stepping in front of this thing if we do have any nasty breaks early this week. We want to see this market kind of balance out, settle down here before we commit. We want to see a good line in the sand being drawn that we can trade around. And so it's just going to take a little time to develop, but we should see the bulls step in and offer support to this feeder market as well as that live cattle market here during the week ahead. Offer good buying opportunity to keep this uptrend moving higher throughout the early part of this year. Look for our buyers' support to step in here across both feeder and fat markets. Be patient, slow play it, let the market kind of balance out before we get committed to any new long positions, but we should see this market get bought back up and continue moving higher soon. Next up, our March corn futures, seeing a pretty nasty break last week. WASDE report on Monday pushing this market down below this prior range low at 435. Real sharp break, losing about a quarter on the day before balancing out throughout the rest of the week at these oversold levels. Price just trying to digest this big breakdown here, so we saw some nice swings back and forth here between about 420 and 427. This market is now in downtrend territory as it is trading below these range lows, and we've got these declining moving averages coming down now. This market is at oversold, overextended levels, like I stated, and starting to balance out down here between 420 and 427. Relief rally could be due here to try and chew back up here into some of this prior inventory and leftover supply from this big breakdown. Look for relief rallies to take us higher early this week. Bids above 427 and a quarter here should have this market moving back up into the 430s and try and test either these range lows from below. 435 is going to be a good spot where the sellers are going to step in and start selling again if we do start to see this market pull back up into this area. We got our declining moving averages coming down here that are going to continue to, or that will start to provide resistance if the price is able to pull back up into that area. We expect to see the sellers get aggressive up here in the 430 to 435 area if this market does start to pull back up into here. But we do have some pretty heavy selling pressure here that should keep a weight on this market and keep prices generally drifting lower here over the next couple of weeks. After these oversold conditions here, we should see a little bit of a relief rally offering a good selling opportunity over the next week or so here, but we want to wait and see how this market sets up during that time. If we do just continue to flush down here below 419 and 3/4 here early next week, we could see that selling pressure really kick in and start to push us back down here towards these contract lows. But either way about it, this market is facing a lot of selling pressure, and we should see the downside continue here in this corn market. Might just need a little bit of a relief rally early this week before the sellers really step back in. But at the moment, this corn market's looking heavy, and we should see the downside continue here. Next up, crude oil prices. Seeing a nice short covering rally early last week, pushing right up into the 61 to 62 area where resistance started to step in there on Wednesday. Prices pushing off of those low 60s, seeing these prior range lows acting as good resistance here now that we're trading below them. Price breaking out above 59, rallying right up into that area before settling back to the breakout point at 59. This market is still in downtrend territory. Just a little bit of a short covering rally here is expected to get sold off. We got a nice line in the sand to trade around here. If the bulls are able to keep this market held above 59, we could see another range start to form here between about 62, 62 and a half, and 59. Look for this market to keep on chopping sideways here if we stay above 59. However, if early offers down here below 59 push us back down here below our major moving averages, that'll get us back in downtrend territory. We have this big selling pressure, a lot of sellers up here around the low 60s from last week, offering a lot of overhead resistance, so it's not going to be an easy climb to new highs from here, but we should see the bears keep this market either range bound or continue to push down here below 59 if we do get early offers below it. This market doesn't have a whole lot to look forward to, so at best, from a bullish standpoint, expect this thing to be range bound here and trade between 59 and 62, keep going sideways. We need to see acceptance back here above last week's high, about 62.40, to really confirm any sort of uptrend potential. So in the meantime, expect this range bound action to continue here in the high 50s, low 60s. Or if we fail down here below 59 again, we should just see that slow, steady bleed kick back into gear here in this crude oil market and see prices start to slip back down there towards the mid 50s. And last but not least, got our equity indexes. Last week was a pretty choppy week here for each of our indexes as this market just continues to tighten up. We did see some general upside here in the S&P as we did see a new all-time high printing early last week before just balancing out and chopping up here right around the 7,000 level. Price continuing to find good support at the rising 20-day moving average here and the yearly opening range, which was the 2nd of January's range here. As long as we're trading above that January 2nd day low, which is at 68.66, we should see this market continue to hold the upside and slowly drift higher. The S&P is sort of churning around up here, waiting for the NASDAQ to get a bid. This NASDAQ index continues to tighten up and put pressure up here on this 26,000 level, but just hasn't been able to get that push to close above it. However, we still see good support here at our major moving averages. We're still seeing support at the yearly opening range, which was the 2nd of January's trading session. Still trading above our major moving averages and that yearly opening range. So at the moment, it's not broke yet, so don't fix it. Look for this market to continue to put up pressure here on this 26,000 level. If the NASDAQ is able to get some bids here above 26,000 and confirm with a nice strong close above some of these recent highs, should really kick the stock market into gear and get this uptrend really moving. The Dow continues to be in uptrend territory as well, along with the S&P, as this has been where the relative strength is. We're going to start seeing earnings roll in here over the next couple weeks in the finance and banking sectors, so look for a little bit of volatility there. But if the earnings are going to go well for those finance stocks and banking stocks, that should really continue to push this Dow higher and keep this thing strong. We still are seeing good support at our major moving averages and trading right around these all-time highs. So we expect to see the upside continue until this market breaks down below the yearly opening range, which was the 2nd of January's low here, coming in at right around 48,000 here on the Dow. As long as we're trading above this area, this market still remains in bullish territory, along with our other indexes. As long as they're trading above our yearly low, we are still in good shape, and we should expect to see the upside continue. If we do start to trade back down below the 50-day moving average and break down below our yearly opening range lows, that's going to be where we're going to encourage everyone to start getting defensive. So be cautious and be aware of these levels down here. And if we do start to slip below them, that's when we're going to start to raise cash and look to get a little bit more defensive. But in the meantime, this market is coiling up and looking like it's getting ready to break. And we should see break higher, that is. And we should see some more upside and keep these all-time highs rolling here across these indexes. Stock market looks good. Growth stocks still seeing good traction here in certain sectors. So not a whole lot to be cautious about. If we do start to move below those 50-day moving averages and the yearly lows, that's going to be where we're going to need to get to defensive. But in the meantime, sit tight and let this market continue to push higher and try and get some bids rolling here in the NASDAQ and that tech sector to really keep this thing rolling. That's all we got for this week, or that's all we got for today. Thank you everyone for tuning in. We will be catching you tomorrow night for closing comments. Thank you for everyone for tuning in. Have a good evening.